Hey guys, this is Rudy for Bester Investor. I managed to do something yesterday or the day before that I'm really quite efficient at, and that is confuse everybody. So what I thought I would do is recap and revisit some of the information that I shared with you in my previous video. So I'm actually going to rename that video that I made in terms of the par value of Occidental shares based on its fundamentals. I'm going to rename that one part one, and then this one's going to be part two. But I'm going to revisit the things that I shared with you yesterday in that video, and see if I can actually create some clarity around some of the comments that I made in terms of what it is that I was actually trying to tell you. So what I'm going to do is I'm going to just recap some of the exact same information and slides and content that I shared in that video. I'm just going to revisit it. So firstly, in the first place, when you talk about equity, par value offers very little relation to the shares or the market price of the shares where they're currently trading. So for all the people who say like, hey, Mr. Oxy, you said Occidental is worth $10 a share. That was kind of like the nominal value or the face value of the shares based on its fundamentals. It has absolutely nothing to do with how much Occidental should be trading at in the marketplace, as I'm going to try and show you in just a minute. So the first thing I want to do is revisit and go back to where I was. So I said, imagine a student. Obviously, this is not a North American student because you can see on the balance sheet that he or she has zero liabilities, which is not possible to do in America. Um, okay, that's kind of tongue in cheek, but here we go. So this particular student has $100 in the bank, and because he or she has no liabilities, $0, the equity of this particular student is therefore $100. That means if I view the student with this imaginary student who is a human resource, which means he or she is an asset that has the ability to generate income and future revenue and future earnings and build assets in the future, because humans are awesome. So if we take this particular student and say this particular person is worth $100, my starting point is to say, well, wait a minute, over the next 40 years, this particular individual might earn $50,000 per year as a salary. And if he or she were to do that, then their future projected earnings is about $2 million using my example. So you could say, based on a discounted cash flow, for instance, I'm going to say this person is worth at least $1 million. So if I had to say to the student, hey, how about this? I give you $100,000 today, and then for the rest of your life, you give me half of whatever you earn. That would be a really bad choice if the student were to say, yes, Mr. Oxy, give me $100,000 and I'll give you half of my money for the rest of my life. Not a very good decision at all. But you can see where I'm going in terms of par value compared to the actual value that can be generated by an asset, in this case, a human. So when we revisit Occidental's balance sheet, we saw that Occidental has assets of about $85 billion. It has liabilities of about $65 billion and owner's equity or shareholder value of about $20 billion. So the 85 equals 85, which means our balance sheet balanced. Then we broke down the $20 billion owner's equity 50-50 because Berkshire Hathaway owns about $10 billion in preferred equity. And then the rest of us, so everybody else together, owns common stock valued at about $10 billion. So in the first place here, I have a dichotomy between the market cap or the market valuation of Occidental Petroleum as per the stock market, because the stock market values Occidental Petroleum, the entire corporation, at $10 billion. In fact, it's currently valuing the entire combination of Occidental Petroleum plus Anadarko at $10 billion. And you can see just Mr. Warren Buffett's preferred shares alone for Berkshire Hathaway is worth $10 billion. So what I'm saying right from the get-go, out of the gate, is that Occidental is worth much more than $10 billion, which is what the market currently is valuing Occidental Petroleum at. So my first point here is Occidental is grossly undervalued. But if I go back to my calculation that I shared with you in the previous video, I said if the common stock is worth $10 billion and there are almost $1 billion of common shares outstanding, In fact, I think that number is about 940 million. So let's call it a billion just to make it easy math. 10 billion divided by 1 billion is 10 billion, $10 per share. And that's where a few people said, Mayday, Mayday. Mr. Oxy, you just told me Occidental is worth $10 a share. It's currently trading at like 11 or 12 bucks. I better sell it. No. That's not what I was saying. I was actually just calculating the par value, face value, or nominal value of a share based on fundamentals. By the way, if you didn't know where the word or the term Mayday comes from, in 1923, maybe it was 1924, when ships were in distress, they started saying Mayday, which kind of sounds like the French word Mayday, which means help me. So you see, you don't only watch Occidental Petroleum for Occidental Petroleum news, you actually watch Best Investor for news of trivial nature, which helps you nothing whatsoever. But anyway, think of all the things you can learn when you're watching my videos. So if we go back to $85 billion in assets, we know approximately $10 billion is cash or cash equivalents. We kind of knock that off the asset value of the company because they also have approximately $10 billion in current liabilities, which means liabilities that are due over the next 12 months. So if we say the company is left with about $75 billion of fixed assets, those assets are currently, even at low prices like $40 WTI per barrel, generating approximately $4 billion in net sales per quarter. So this is a company that generates $16 to $20 billion in sales from those 65, $70 billion in assets. So in answer to some of the questions that people posed are including the fact that maybe the assets on the books are overvalued. It's possible. It doesn't matter. These assets are generating money and generating money bigly, as President Trump would say, or big time. So I used the other example. I said, how about if I had $1 million in the bank and I opened a new McDonald's? And because I had $1 million to begin with, I have no liabilities, which means my nominal value or face value of my investment is $1 million, right? Because I need to have my balance sheet balanced. I have had $1 million in the bank, and that $1 million in the bank allowed me to have no liabilities, and now I have a $1 million shareholder value in my asset, which is $1 million of McDonald's. But what is the McDonald's actually worth? So using the same example, just simplified, that I just used for Occidental, my $1 million asset is generating, let's say, $100,000 in revenue per month. That's $1.2 million per year. So if I wanted to sell this business, you could say, how much could you sell it for? Well, even if I just sold it at a price equal to 1 year's worth of revenue, that would be $1.2 million, which is already a 20% uptick. But how about I do this? I say the assets are worth $1 million. I know that because obviously I just put $1 million into the business. So I can say the assets, all the assets together, are worth $1 million. And in addition to that, I generate $1.2 million in revenue per year. Based on a discounted cash flow, I might say like, okay, that value to me is $600,000 and I could sell my business for 1.6 million. You get where I'm going? In other words, it's worth more than just the asset value on paper. So I just looked at a business recently and I thought I'll share this one with you because it's a real business. This particular business owner is asking $10 million for his business that he wants to sell. In other words, his asking price is $10 million. So I dived a little bit into his books and I saw he has revenue per annum of $835,000. And he actually generates approximately $760,000 in free cash flow. You might say like, wow, that's a lot of free cash flow on $835,000 in revenue. And yes, the answer is that is correct, because this is a self-storage unit and you can actually run the entire asset with one employee. So the costs are relatively low. The rest of the costs just being property taxes, maintenance, and stuff like that. So it generates a lot of free cash flow. That's one of the reasons why self-storage units are so popular as investments for people like you and me. Anyway, his asking price is $10 million. So if I dive into his books a little bit, I see his asking price is $10 million. If I were to buy it, that would be my purchase price, so that would be my asset. And what does it consist of? So if I split it 50-50, just for the sake of a simplified example, I can say 5 million of that is the real estate, because I'm actually buying the property, the improvements to the property, plus the existing inventory. And the other $5 million is what I'm paying him as a multiple on his revenue. So if we go back to the previous slide, I said his revenue per year is $835,000. So if I had to say, I'll give you 5 million for that, I'm giving him a 5 to 6 times multiple on his annual revenue. And the other $5 million is for the other fixed assets, real estate improvements, and existing inventory. You can slice or dice this any way you choose. If you say, for example, the assets, the fixed assets, the real estate, the improvements in the inventory is only worth 2 million, and I still agree to pay him 10 million, then I'm giving him a 10 times multiple on the $835,000 as part of my purchase price. So I hope this clears it up for you a little bit, because what you can see is that if you have a company like Occidental Petroleum that has assets on the books, fixed assets that are currently around $75 billion, that generates revenue at a clip of around $3, $4, $5 billion per quarter. The company is worth a lot more than just $10 billion, which is where the market currently values Occidental Petroleum at. So guys, that's a wrap. This is Rudy for Bester Investor. That's my video channel. I would like you to click on the subscribe button if you can find it. And let's build this community of like-minded investors. Let's get together and create and build some generational wealth. So on that happy note, this is Rudy signing off, saying keep well, stay safe, and don't forget to subscribe. Thanks for watching. It's good to see you guys, and I look forward to your comments. Bye-bye.